It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, July 14th, 2015. Back here one more time for our jam-packed nightly newsletter. Boy, we got a lot to talk about here. We got a deal in Iran. We got a vote coming in Greece, and we got an inventory report that was just the lowest draw in the last 16 months here for crude oil. That's right, we had an API number just a few moments ago. I got a ton to go over here for us, so we are ready for tomorrow. The word is still trading ranges right now. Traps, failures, great opportunities today to do so here. I can't wait to get in here and get my hands dirty on this stuff with you guys tonight. Before we get started, though, please remember, everything I'm talking about tonight in tonight's newsletter video, we teach to all of our students here at School of Trade. Check out schooloftrade.com. We get a great free trial. You can register right on the homepage. And, of course, I'll shoot you over an invite to come out and test drive our live trade room. Also, we'll talk more about the free trial here at School of Trade later on. I also want to make sure you're watching this video on our trading blog here this evening at sidewaysmarkets.com. If you're watching the video on our YouTube page. Now, there's a ton of great videos, day trading videos on our YouTube page, but trust me, in the description of the video on YouTube, you'll see a link that'll take you over here to our blog page. There are 3 reasons why it's in your best interest to be watching this video on our trading blog. First of all, you can download all the charts I'll be using tonight in the video. You can download all those charts by following that link right below tonight's video. Nice and easy. That way you've got all the charts on your computer for tomorrow. Second thing, upper left-hand corner, I'd love to give you a free pass. If you're not a member of School of Trade and you'd like to come out and test drive our live trade room, grab your free pass in the upper left-hand corner. Lower left-hand corner, right above my ugly mug. You'll see a spot there for your name and your email address if you'd like to join our nightly newsletter mailing list. That way you never have to worry about missing another newsletter ever again. So, once again, make sure you download those charts for today. Grab your free pass. Come out and join me tomorrow as a guest. And, of course, don't forget, you can join our newsletter list. Guys, if you join the newsletter list or if you grab your free pass, please don't forget, I'm going to send you a verification email. So make sure you check your inbox, spam, junk folders, right? All kinds of good stuff there. All right, make sure you check for the verification email, and we're off. Starting here this evening with our newsletter for Tuesday evening. We're talking about Wednesday's plan here right now. And, of course, no better market to start with than the euro. So, of course, we have this last-minute deal that's happening in Greece right now when supposedly tomorrow is the big day here that they have to get that thing passed through the parliament in Greece. So we know there's going to be a lot of kind of standing around, waiting, and kind of watching to see what happens here tomorrow, which really just tells us, be patient. Be patient. You know, we're not going to trade the headlines. We're going to trade the chart. And right now, trading the chart seems to be working pretty darn well. Trading ranges, right? Like I said before, that's the word of the day here for probably the rest of this week here. It is summertime, so we know that we're looking at trading ranges, possibly more of them throughout the summer. So get used to trading like this, fading the highs, fading the lows, looking for traps and failures, right? We already saw, this of course is nothing new here. So euro trading sideways inside a range, which means we're looking to buy the lows and sell the highs with traps and failures while avoiding the middle of the range. So first of all, stay the heck away from this 1050 area, right? Don't be looking to get into trades in the middle of that range. You can easily see there's my trading range. And of course, you get this bearish trend leading into that trading range, which means we have a bearish bias. So definitely want to err on the sell side, right? Short sellers, you guys have control right now, or at least you've got a little bit higher percent to your trades, right? A little bit higher probability to your trade short right now. Doesn't mean you can't buy these lows, but if I had to choose right now, I would definitely choose to be a bear right now on the euro. So what's the plan? Well, as you can see here, price goes up to the range expansion, comes back down, all the way to the range low, goes back up to the range high, comes back down. Where do you think we're going to head next? Yeah, I'm going to guess going to go back to these highs. Now, of course, let's talk about failures and traps. Basically, they're the same thing. Right? A trap is a term that we use in price action to basically illustrate or to describe trapping, in this case, the sellers at the low, the buyers at the high. So basically what I'm looking for is, I'm looking for price to go back towards these highs. I'm looking for buyers to try. I like to wait for them to try twice and then sell into those stop losses, right? That will be called a buyer failure. And then, of course, the trap occurs, but when the buyers try to push above that high, right, and they fail back in. So we're looking for failures at the highs to sell the highs. That's going to be the higher percentage trade right now because of that bearish bias. Then, of course, we're looking for failures at the lows. Just remember, though, if you're going to be buying these lows, you are technically counter trend, right, to that bias. So what does that mean? That means make sure when you buy these lows, if we do go lower, wait for sellers to try and fail and then buy right into those stop losses. Again, I like to wait for them to try twice. So I like to wait for the sellers try once, nope, try twice, and then, of course, right where their stop losses will be, I'm looking to buy right into that. If you're going to be buying the lows, though, again, you're going counter trend, so make sure you use a quick first target, tighten up that stop loss, lock in a profit, remove the risk, and hold that sucker back up to the highs here. Buying those lows, profit up at the highs, selling those highs, back down to the lows, buying those lows. And again, we will be listening in tomorrow to see what happens out of Greece, right? We will definitely be kind of walking, maybe not walking on eggshells, but I'm definitely curious to see how this is going to go tomorrow. It doesn't change anything, though. Right now, the plan is buy those lows, sell those highs, and out looking for failures. Now, let's go into some crude oil here, the CL futures. Remember, we still have a few more days left on this 8/15 contract. We got a lot going on this crude chart right now. First of all, we know we have a bearish bias. A lot of these charts look very, very similar. They're not exactly the same, but most of these markets right now have a bearish bias into a trading range. So we know if we had to guess, right, somebody puts a gun to my head and says, what side you got, JJ, right? I would say, okay. Do you need the gun, right? I don't think you need to use force. I'll tell you, the bearish bias, right? So I'm definitely looking for a bearish direction here right now. Now, as you can see, though, we're going higher here right now. Well, doesn't really make much sense. Think about what's happening here. We have a new deal out of Iran, right? So basically they're talking about a new nuclear deal has been reached. What does that mean? That means they're going to release all this, hopefully, right, get rid of all the sanctions, hopefully for the Iranian sake. They get rid of all the international sanctions. And according to the news feeds I'm seeing, right, the Iranians are talking about tripling, quadrupling the production of the black gold, right? Production of crude oil. So why is that price going higher? That's a very good question, right? So we have another kind of hat in the ring now. We've got a lot of commotion over the past few months about new refineries coming back online in the Middle East, new technologies allowing for deeper drilling, right? You've got companies here in the U.S. that are going out into the Arctic Ocean right now. So, boy, I'll tell you, there's definitely no reality of shortage of this crude oil, I'll tell you that much. But when was the last time we actually traded reality in crude oil? Bottom line is, the news out of Iran is not a bullish number, right? I mean, it shouldn't be a bullish piece of news, but you can see here we are up near these highs right now. The biggest thing we have to deal with tomorrow as far as news goes is this API number. This API number, which you can see I posted in the lower left-hand corner. Now, don't forget, every Tuesday, pending holidays, Tuesday at 4:30 and Wednesday at 10:30 a.m., of course, on Wednesday morning, Tuesday afternoon. Well, last time I checked, yeah, it's Tuesday afternoon, and we just got our Tuesday 4:30 p.m. Eastern Time API number. Just a little bit of a draw. I'll tell you, they're really they really sharpen their pencils over at the American Petroleum Institute. They just barely missed their expectations of negative 1.0. I'll tell you, I would love to learn more about how they make these expectations, because I mean the API and the Department of Energy, the DOE, they have been the laughing stock of these economic reports over the past year or so. And you can see they were expecting -1, they got negative 7.3. That's the largest draw in inventories since May of 2014. So it's a pretty hefty draw in inventories, right? So if there's lower inventories, then that must mean there's either more demand or less supply, right? Think about it's a shoe store. You get fewer shoes in the warehouse. What does that mean? Well, it means we either got less supply coming in or we got more feet to put shoes on, right? So Lower inventories, there's either more demand. We haven't seen any evidence of more demand, right? In fact, over the past few months, we've been dealing with lower demand. China, Europe, of course, the U.S., we're just pumping more out of the U.S. Now, there is the summertime driving season, which I swear was created by the DOE. I swear this whole summer, I'm paying $5 a gallon right now here in Los Angeles, all because of the summertime months. Supposedly people drive more in the summer. Sure, why not? We'll make up another reason to explain this. While the rest of the world is trying to understand all this, I'm going to trade the chart right now. Bearish bullet, right? Bearish bias into a trading range. And what it looks like is it looks like a bear flag. It looks like what we're getting right now is a bear flag. And of course, I broke out my best Bob Ross interpretation. If you don't know who he is, he was on public television when I was a child, right? Those happy little trees. If you've never seen Bob Ross, you got to go to YouTube and check him out, right? I'll give you the link, but I'll let you guys go find him. But bottom line is, though, I pulled my best impersonation here of Mr. Ross, and of course, we have a bear flag. So what I'm seeing right now is I'm seeing that strong push down. Right? Sellers are fully committed. And now, of course, we're getting this somewhat lazy and slightly bearish channel to it, right? That's why it's called a flag, right? It kind of, this one's a little bit upside down, right? If it looked like this, it would look a lot more like a flag, right? If it was a bull flag, it looks a lot more like a flag, right? Anyways, bottom line is, this is a bear flag. And a bear flag has really three main components to it. One, you have that strong spike down. Two, you have this lazy, and it really is lazy. It's a lazy channel. Now, many of you have already seen me or heard me talk about this before. And what's the third thing? Who knows the third aspect of a flag or a spiking channel or a pennant? A deeper correction, right? Why? What's the deal with deeper correction? Well, remember, what is that spike doing? The spike says we're fully committed, right? The spike down says the sellers are all in. Think about it. That's what's required for a big spike down, right? Okay. So now, why is it so lazy? Well, because in order to attract more sellers, right? How do you attract a bear? With a picnic basket, right? With higher prices, right? So the sellers, the bears are all in. And so the only way for price to attract more sellers is to get a deeper correction, right? We got to get prices going higher. And what usually happens is you have a combination of the sellers taking profit along with the sellers, they're waiting for a higher price so they can get back in and take this sucker down. And usually, not always of course, but usually what will happen is this ends up being an A, B, C, and D, right? So it usually ends up being a measured move once we get that big correction. So right now, it feels like we're right about here, right? It feels like we're right about here. So we've got some news out of Iran. So we have a big deal happening in Greece. So we have a 16-month low draw in inventories. I can definitely spell enough to see maybe this is that deeper correction. Okay. I don't know. Neither do you. Nobody knows if this is going to be that deeper correction. But that's what I'm seeing right now. So if it does spike higher here, don't go freaking out. It's all part of the flag. Follow the flag, if you will, right? Follow the flag, if you will. So we know we have inventories coming out. I wouldn't be surprised if that sends prices higher. Honestly, I wouldn't be surprised if it sends prices lower either. I'm not here to predict. But I do know for a fact, though, we have a bearish bias into a trading range, which means the word of the day, traps, failures, nothing changes here going into tomorrow's session. Okay, up near the highs, bull traps, sell it. Okay, if we can get in short at these highs, you've got some targets waiting for you down here. Now, I slipped in this little trend line here because that's probably going to be a difficult spot to get through the first time through. So you might want to make sure that's a good juicy profit target for you. Depending on when we get there, it may be as low as 51.50, it may be 52. 52 was a pretty popular number today's session before it spiked higher, right? If you recall, we had a great day in the room today with our students trading crude oil. How about going higher here though, right? ABCD going higher here, ABCD, I've got extensions. So, again, I'm not going to read into this too much more. I've pretty much thrown everything out there for you. We got inventories tomorrow at 10:30 a.m. Wouldn't be surprised one bit if we jump higher here overnight because of that large draw. But I'm not changing a single way that I look at this. I'm looking at this as a bearish market, and I'm just waiting. The higher this price goes, the more lucrative that sell becomes as we wait for buyer failure. So we go up. Buyers try once, buyers try twice, and we sell this sucker right back off, right? Find out where those buyer stop losses are and sell it right back on down. If we do end up near these lows tomorrow morning, once, twice, buy those lows, right? So it's pretty much the same plan that we just talked about on the euro, and it's going to be a little bit of the same for the rest of the stuff today too, because a lot of these have bearish trends into a sideways range. Very similar to what we talked about in last night's newsletter. What you need to be aware of, though, is that if this thing shoots up, the higher it goes, the easier it's going to be to see those buyers try and fail. Also, don't forget, we're going to be updating this chart tomorrow morning once that opening bell rings. I assume we're going to get some action here overnight. Okay, the higher it goes, the more likely we are to see that buyer failure and bring it back down. If you are going to be a buyer at these highs, I'm sure some of you might be shaking your head going, "Oh, Joe, what are you talking about?" Right? Look at the inventories. Look at the inventories. It's got to go higher. Well, sure. If it does push higher and you want to get long, the best way to do it up at these highs, think about it, is seller failure. Wait for the sellers to try at any of these resistance areas and look to buy into those stops. Just remember, though, it's got to be a scalp here if you're a bull right now. If you're a bull in a bear market, everything you touch needs to start off as a scalp. So quick first target, small tight stop, tighten it right up, and then do your best to hold as much as you can. There's very few reliable ways to buy in a bullish and a bearish market. Okay, so I will err on the side of waiting for buyers to try and fail at these highs, to sell these highs, and take profit down at the lows. And then again, if we find ourselves down at these lows again tomorrow, look for those bear traps, and we can buy it right back up. Just remember, though, a little bit more aggressive buying the lows than selling up near at these highs. Very exciting to see what happens here tomorrow, because we have a ton of resistance areas overhead, and just the way it's setting up right now with that API number, I mean, your guess is as good as mine how high this thing could go tomorrow. Or it could collapse. That's the beauty of being a day trader. We got to wait and see what we get here tomorrow on crude. How about the gold? The GC, is this the same chart? I mean, this literally could be the same chart from yesterday. You'll notice we are literally pegged right in the middle of this range right now in the gold. The most important thing you can do here on gold right now is stay the heck away from this area right in the middle and wait for prices, right? Remember, bearish bias, sideways trading range. I mean, this chart has been, literally it's frozen right now, right in the middle here. I assume a little bit of it has to do with Iran. I'm assuming a little bit of it has to do with the Greek situation. Potato, who cares? The chart still looks the same. We know we're looking for prices to try to test these highs. We'll look for buyer failure to sell those highs, right? So keep selling here as we go higher. And remember, I'm not just blindly selling. I'm looking to sell with buyer failure, right? I'm looking to sell with buyer failure. The hard part here is going to be at these lows. I'm going to look to buy those lows with seller failure. Okay, we get a lot of support down here. Major range low, measured move support. So if we do push lower, whatever you do, stay away from selling those lows. You're not going to make much money consistently in this business trying to sell lows or buy highs. So remember, stop thinking like a human and think like a trader, and look for the sellers, right? Those uneducated sellers to try to sell those lows and then buy right into those stop losses and try to get that thing back to those highs. Just remember though, the bears are the ones with the higher probability trades right now. So if you're going to be a bull right now, you want to wait for seller failure, quick first target, tighten up that stop, and hold on to that run or try to get as much as you can out of it. But everything to the upside right now in these markets is got to be a scalp until proven otherwise. Let's wrap it up here with the E-mini. I told you, I mean, this thing can keep going, and now we finally get up to that resistance area overhead. Remember what I said last night? My exact words last night were, we did have this measured move up here, right, which put us up around this 2100 area. So we definitely, I mean, this thing is in the nosebleed seats right now. The S&P, this is a great example of a beautiful place to be looking for selling opportunities right now. So how do we sell in this? Isn't this a bullish market? Well, again, you can see bearish trend going down into a sideways range. Anybody can put together a 2-day rally here, right? We got news out of Greece earlier on this week. We're going to get more tomorrow. Who knows? Who knows exactly what the reason is behind this extreme spike up? But we've got 2 days of rising prices right now. These bulls are fully committed. Now, couldn't you see a flag coming tomorrow? Right? Couldn't you easily see this flagging out tomorrow? Giving us a lazy bear channel on the way down. So what you want to be doing is looking for buyers to try and fail. Buyers to try and fail. Buyer failures, right? Traps here as we go higher. Think about it. This is exactly what you would think about when you look at a bull flag, right? Nice strong spike up. It's a multi-day rally. You know the bulls are all in right now, right? I mean, how many more bulls can there be? Well, actually, there could be quite a few more. But typically speaking, though, we're going to start seeing the buyers take profit. We're going to start seeing some bears start hunting for bargains up here, right? And of course, how do you attract a bull? The color red. Right? The color red, you got to see lower prices if you can attract a bull. So what we're going to do is we're going to take a look at this. It's an A, B, C, D. It'll pull back, right, before going higher again. So we definitely are expecting this price to correct here. How much will it correct? Well, you got to think here, correction back to that 78.75, right? That should be definitely reasonable here right now, back to that range high. What I would assume is going to happen here this week is we get this flag or possibly a full-blown collapse. See the buyers try, and then this is where the buyers are going to have to hold on here. This is where the buyers are really going to have to kind of flex their muscles here, because if they can't hold it up, it's going to collapse and go right back to where this flagpole started, right? That's what happens when you see a failed flag, is it returns right back to where the whole thing began. If it doesn't return back to where it began, then of course we know we have that A, B, C, D all the way back up, right? So definitely looking for buyers to try and fail, right, for selling opportunities here on the S&P. Again, we can't just blindly sell. That would be foolish. Then we'd be gambling. Then we'd be predicting. Okay, nothing different between going to Vegas and just guessing, put it all on black. So we're going to wait for price to try and fail, right? So the E-mini S&P is bullish. You know, I'm not going to say we're not looking pretty bullish right now, but we're overbought after 2 days of rising prices, which means sellers will be waiting. I mean, you can almost just hear those sellers just waiting there right now with the guns all loaded up, ready to go, because you know there's going to be buyers taking profit, and you know sellers are up here looking for bargains right now. So the bulls got to take some chips off the table, and the only way to re-engage those buyers again will be lower prices, right? That's the only way to attract a bear or a bull is to get some lower prices here. Okay, so sellers will be waiting for these buyers to try and fail at these highs, look for opportunities back to that range. I mean, this is the S&P we're talking about, so we may not get it all the way back to that range high here, but we can definitely give it a good push on the way back down. Most importantly thing, Joe, that was horrible English. The most important thing here for tomorrow, hope the kids didn't hear that at home, sorry parents, was I'm looking for those buyers to try twice, right? And then of course, when they give up, and fail, sell right into those stop losses. If we happen to miraculously end up back here at these lows, I will also be looking for buyers to try again and fail to sell into those highs. Bears, you got some great targets waiting for you to the downside here, right? No shortage of support zones below you right now to use as targets. And then those will also make for excellent areas. Price pulls back to support, buyers try, buyers fail, right? That's another example of an area where while we're going lower, price bounces off support, I'm selling right into those stop losses because that's the easiest money you're ever going to make as a trader, getting in short when the buyers are being forced to the sidelines. How do they get out of those trades? Market orders. That's why it's such an easy way to make a good profit. Guys and gals, bearish markets across the board. The S&P is definitely the one here that is ripest right now. Crude might still have some gas left in the tank. Wink, wink, nod, nod. Bad pun, right? Bad joke. I thought it was a pretty good joke. But we know we do have crude oil going into inventories tomorrow, so definitely come out and see me tomorrow morning in the trade room. We'll trade our plan for inventory day tomorrow. Again, euro, keep trading that range. And would somebody nudge gold and wake this market up? I know it's waiting on Iran. I know it's waiting on Greece. But come on, gold. Let's give us something to work with here tomorrow and give us a chance here to sell those highs. Wrapping things up here with you guys. Don't forget, enjoy our trading blog there at Sideways Markets. Before I leave you, though, I do want to remind you, we've been doing this at School of Trade longer than anybody else on the interwebs. Guys, this newsletter has been going around for like 10 years now. We've learned a thing or two about helping new traders get their new career started. That's right, we're not just gambling here. I'd love to show you how we launch a new career as a professional trader. Grab our free trial right in the middle of that homepage. You can't miss it. And then don't forget, I have 3 levels of membership to make sure that everyone has a way to kickstart their career, whether you're a beginner, intermediate, or you're a grizzled veteran. I've always got someone standing by here 24/7 to help you guys out. My name is Joseph. My trade room opens up tomorrow morning at 8 a.m. Eastern Time. And my next newsletter is tomorrow evening at 8 p.m. Eastern Time, Monday through Thursday evening, of course. Don't forget, leave me a comment below the video. Give me a like or a dislike. I love getting some feedback. I'm always trying to make this newsletter better for you guys and gals. Be well out there. Be nice to each other. And remember, trade what you see, not what you think tomorrow. Follow the plan. I'll see you in the morning. Adios, amigos. Bye for now.